This is Justin on Friday, October 14th, 2022. I brought the fibs back on SPX. So these are the same fibs and a few pennies or so of what I had from 3 days ago, I think. And these are the ones I had extended up yesterday to capture some of the move up. And then today we opened up right into like right above the close of yesterday, but outside of yesterday's range, ran up a little bit right into this resistance zone, almost into this percentage that is 100%, 200%, the 200% from this one, from here to it's below there. Anyway, almost tag that close enough, just short it from there, or wait till it gets back below the 10. Here's some bull candles closing below the 10 EMA. And even this candle, which is a really nice hammer, but this candle at one point had triggered you in on this bull candle with a move below. If you're waiting for a close below, that would have to happen on this candle. This was just, just some extra consolidation with an inside candle here. I'm going to jump over to the 3750 call. This did something really similar where you had some bull candles closing below the 10. Yes, you can see the same things happening on the options. And then here is the bear candle closing above the 10 on the 3600 put. This one I bring up in particular because it had a smaller range. These ranges were still more than one. But this was one that, this was about 100 points away, but still gave you a decent range to work with. Even, like I said, with the move of this candle getting above this candle, put, so it's kind of flipped. So when I moved above, set up an entry to get in midway through this candle, which would be around like 350. So buy at 350, stop down at 250, which would have been just below here. It's really tight, but you got the 10 in your favor. But that would have been a way to do this with $100 risk. I did not do that, but it had a really nice run on this next triggering candle, triggering for this, this bear candle here. And then just kept coming back up to that price for a little bit here around like 14, 13. That was, this quick move here right into the green line, this purple downtrend line. So this was like an X marks the spot. Plus you had the 138.2% move or percent range. And then we moved right back into the range of, let me zoom back out on this. This is the measured move. So from here, I just picked the high and the low. It's not like 100% accurate way to draw the fibs, but it worked for what I put in the video 2 days ago. And then I drew in some extra fibs when I was trying to measure, like, why did we reverse down here? Why did we get to the, and like the 100% down was like right here from one of these ranges. I don't remember. And then I redrew some of these thinking, okay, we ran into these nicely. And this green line lined up really close to 138.2. And then sure enough, coming back down into it, we were running into these same levels because we're in the same kind of range. So this was the overlap, 50% and the 618. That was kind of our resistance high from the other day. And then it actually was a really good place to have a little bit of strength, just a little bit of selling, a little bit of buying come in, buying to close maybe, came back up. I had a really nice hammer here. So like, I'm just gonna mark the candles that are the 10 EMAs. So there's that, there's that, there's that, that one, but by now you're 1, 2, 3, 4 in. There's more, like all of these. This was a nice small one, and then we got above. So like kind of, nix all that, and then we didn't get below that one. And then here we go. Here's one of our kind of bookended bear candles, and both of these are, again, bear bull candles closing to a 10. All of these are. Here's a really nice inverted hammer, so you can go right there. By this time, it's like, okay, it's had a decent move. You got to wait a while for a rest, and sure enough, that's what we got. Started to break down a little bit more later. Some folks were expecting a huge push lower, and it just chopped into the close. So yeah, the move was basically this into the levels that we were in, into this level from 3 days ago, right? Is that the same price? Yeah. So this level here, this 50% from the high to the low and the 618 retracement, like I'm saying wrong. I've got it drawn with 100% here, but if I drew these different, where 0 is here and 100% is down here, so flip it. So it's the 50% mark, yes, that's the same. And then the 382 would have been a retracement back up from that move down, from this move down. No, that was the 50% from this move down. That would have been, no, it's a 618 retracement back up. Okay, I'm saying it right. And then this move you take from here, and then I didn't do this, but if you draw from the low down here up to the high, I didn't redraw that. Maybe I'll do that this weekend. And but it was just really interesting that we were right back in the same area. So this was really nice resistance 2 days ago. And here we are coming back in and bouncing off it and then just chopping on it. We actually just hung out right there, and you had some patterns coming in where you're just kind of bouncing off these levels and then bouncing it, like you're just ping ponging back and forth. It's like, okay, we're just chopping here. What is really going to happen today after that move and then that move? What's really going to happen today? Not so much more. Let's draw this for now, just for fun. Actually, let me just copy this one. Let's see what we get. Duplicate that. I'm just going to draw again up to like the high, and then here. And so, yeah, so I'm going to delete the ones from 3 days ago. Okay, so from yesterday to today, and I'm just taking an approximate, so we've moved back back down to the 50% level, and that's where we chopped during the day today. And then we were pretty much a good chunk of the day was in between the 382 and the 618. So the fibs really just showed some good levels. The levels from 3 days ago, where we had this news, it was a news announcement on something in Europe. Like these were good levels to go off of, with a big move yesterday and the retracement of that move today. And I think I did say we'll look at some. Okay, this looks like a mess, so I'm going to delete some of these because these are definitely not the correct angle. These aren't the correct angle. We can redraw them back in if we need it. That one's not the correct angle, at least not on the daily, but that's the one I like on the 3 minute here. That's this one. So I'm going to keep both of these on. In the 3 minute, they're fine, but it's this one and this one on the daily here, and it's not fine. I've got some more smaller ones I can see than the 1 minute. The white lines aren't good. These are looking like the right angle. That one's not. So I got some cleanup to do on this. I can work through that. But I wanted to jump over to the weekly chart and see what was going on here, because there we go. Okay, so again, just ignore the drawings, and if I could turn them off easily, I would, but I don't remember to do that. So we're just going to keep them on here. We had a close below the 200 simple moving average on a weekly. This is very substantial, very significant that we got this, because yesterday we were way up here. This was looking like a really strong bull hammer, and we should bounce, we should run up, and it looked more like this, but bullish, like stronger than this. And here we are closing back down below. So we kind of got a close here 2 weeks ago, just below. So that was kind of not necessarily the first warning sign because we've been selling, but then we had this inverted hammer. It's like, okay, if we close below this hammer, and the other thing about this hammer, this inverted hammer, sorry, is this is now the first bull candle close below the 10 on a weekly. So this is the weekly 10 EMA right here. Nope, that's the 5. Wait, that just says 5. Oh, nope, that's back on the daily. Daily. Why is that? Okay, I don't have the 10. I'm going to just change the 10. I'm going to change this to the 10 real quick because I was trying to make a point on that. Back to, see, I'm doing this on the fly. All right, there's a bull candle close just above the 10. Here's the first bull candle close below the 10, and this candle triggers it. So this weekly candle has now closed below that bull candle. So it's triggering the move lower. So what I'm seeing here is just like we had today on the 3-minute. So if you squint, you can see like the run up and then the run down, and then you have some chop through here. Maybe we'll get some chop next week. I don't know what it's going to look like. The 10's going to continue to come down, and then freeze that picture in your mind because I have to delete it to go to the next screen. Then back over here, that kind of looks like some of this, where we had a run up, run down, some chop through here, and then right here, it's like, okay, today we're looking kind of like this without the lower wick. So ignore the lower wick there. So in a 3-minute, I'm picturing kind of like, so ignore that. And then this one's got a higher wick, and then you got the 200 coming through here like that, or whatever it was. So we got to close below, full close below the 10, and then we've got a bear candle closing below the bull candle, triggering us in. Or you can be triggered in, but it's signaling, okay, yeah, that's the entry. Get in. You could have gotten in yesterday, because we're way down. So anyway, this just reinforces that things are fractal. They can repeat on different time frames. And if this is the same kind of thing we are seeing on a bigger time frame, just this right here, then we have much further to go down, which is entirely possible. The other really interesting thing with this is, so you can see this rectangle ends right here. I just extended that the other day on the daily. Get back to the daily. I had just copied the rectangle. I'm like, why am I copying this rectangle? Because I did just run it in here. I'm like, I didn't want to try and drag it. I'm like, I can just open it up and edit it and then move the date. And so I moved it to the 14th or the 15th. And it's just like, okay, I'm going to move it out for a little bit because it's working as resistance, really, really good resistance. This is still an open gap through here. This is still an island reversal. If there was somehow some way that we gap up from here on Monday, way up here, or at any point we gap from below here to up there, then this will become an island reversal right here. And it's almost like having an island reversal and another island reversal and another island reversal. And I don't know if that's ever happened, but it's not quite exactly a real one because this is not a straight through gap because of where this candle is and where this wick is. But anyway, there's not that much strength. I don't see that happening. I'm just saying we need to get above these levels to eventually go bullish someday, but eventually on our way back up. So if you consider this, all this stuff from 2020 where we sold down, we had a bunch of these gaps in here on the way down, and we slowly but surely recovered. So like the gap, the gap there to there, and then that retraced from this close to this high. There was still some gap there. Here's a better one. So this stayed open here all the way until, I would say all the way until now. It's only like a couple months later because this is what happened. This just recovered so quickly. What we're doing now is not going to recover as quickly. At least I don't see it recover because we're in a bear trend. We're making lower highs and lower lows, and so you can see like any gaps over here. So like this gap from this close to this open, it was partially filled this day, but then it actually got more filled there. But then we still have this from this close to this open still as an open gap. Like that range there is still a gap. I'd have to check the actual close price on this to these highs, but it looks like this might still be open. Anyway, here's one right here. So this is still an open gap. So I've got this line drawn here that there's some resistance. So eventually, someday, coming back up, these, this will be relevant because that means we're about to close this gap and maybe some selling is going to come in. So that's kind of on the bigger picture. I may leave some of these lines on here for a while because those will be key levels. Same with this here. When we did this gap down, this was a massive bear gap right here. So like this line was drawn in from the close of this candle. So that'll be an interesting price point to retrace back into, but we're way down here. We're not going to be back up in these areas for a while, especially if we're making lower highs and lower lows for a while. And you can do some fib retracements on these to see how much have we recovered, and then how much do we go down, how much we recover. And I am not saying this is the low, but okay, measure from this low to this high and see how much further we could go. Measure this low to this high and see how much further down we could go. Look at fibs, click the link in the description to get a lot more education on how this stuff can move. Be prepared to trade this, learn, look at the charts, spend the time figuring this out. And if you're having trouble seeing it in the bearish direction, look at it like it's a bullish direction. Just hit the minus sign and flip the chart. And it's like, oh, look, now we're running up. What does this look like? Okay, are we going to pull back anytime soon? Is it going to keep on going? All I did was flip the chart. I just put a minus in front, and it's minus SPX, and now it's flipped. You can do that on any chart. You can do that on a lot of charting softwares. Some of them you have to do the math, so just do 0 minus SPX to look at it. And you can compare charts that way, that kind of thing. But anyway, I'm just going on and on. Did I switch this back? No, that's still a 10. You know what? We'll keep it on the 10 for a bit, because we've been spending a lot more time looking at the 10. It's helpful to have that as 10, and then it matches up with the color I've got on the 3-minute. Is also the 10 with that color. I'll just leave the 21 as the yellow there, but I haven't looked at this as a 5 EMA in a while. So we'll do that. Let's see, we looked at this call, looked at this put. Once you have this kind of a move, looking for some sort of retracement, I would like for a candle like this to be something where I can buy halfway into it. That's a really nice hammer candle. So that would have been a range. Let's see, probably 550 would have been around the middle of that. So you can set up an order to buy 550. So that's the thing with options that I found, is buying halfway into one of those key candles. So this would have been at 10:03. What was going on at 10:03? Oh, that was this. Yeah, so that was this right here, where we put in a really nice hammer, retraced back up to the purple line. Already deleted the fibs. We had some fibs going through this area too. And anybody who is bullish, this was where they were looking. It's like, okay, we're going to double bottom out of here. And it's like, okay, 1, 2, 3, 4, 5, 6, 7 bull candles. Don't go bullish. Don't go bullish here. Don't even go bullish right here on a breakout. Like, wait for it to go down, wait for it to roll back down, and then look to buy. But it's got to hold something. What did it even hold through here? You could say that's, inverted head and shoulders. It's like, okay, now redraw this. It needs to get back up to here and then punch through and then come back. And it didn't even do that. It didn't even get back up to what would be considered like a neckline even here. It didn't even, I can draw that a little straighter. It didn't even do that, where this would have needed to be some more bull candle. We couldn't even make another bull. We did, what did I say, 7 here? We made 4 here. And then we did 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That was pretty cool. We made 10 bull candles there, but it's like, that's enough of the strength. Like, we retraced into that resistance. We retraced into that hammer. Then we sold that. So it's like we keep having these bull candles that rally, and then here we go. We got a bull 5 that are going mostly sideways, 4 that are moving up a little bit. This is just a little wild right into the close. It's like, are we really going to have any sort of rally? Nope, nothing like that. Not that much strength, not that many bears getting out of positions. They're holding on, not that many bulls getting into positions or looking to buy this up and into the close. Nope, not that kind of day. So anyway, I know I'm all over the place on this. There's a lot to take in from this week. Go back, look at the charts, look at the options, look at the levels. These lines, these purple lines are still working. This green line, that was going back to, that was this low back here. That first low we put in that day, and then we kind of bumped into that and broke through it here. It's like, okay, all these times we broke down below it, it's just more sell-off. It's just more times we're gonna get back down there. And then we held it here as support, and then got this bounce, and then came back and crossed through it and held that as some kind of resistance this day. Well, we opened right by it, but yeah, we're playing around with some of these levels again. So it's, we're back down here. So we'll see, do I need to copy this green line down to like the low over here? Or maybe this low right here, like what's going to be the next relevant level? Looks like we got a close today, really close to the close here. What was the close? That was 9:30. So 9:30 was this day. The close was 35.85.62. Today was 35.83 or something. Okay, so a couple bucks away, but really relevant, a really relevant price, very similar price. A bunch of these right in the 35.80s. So the other thing I was thinking about, and I'll end with this, but I was trying to make a comparison of what we did on these 2 days. So well, I saw it similar to this day, 9/21. I'm gonna go. I think I can do this. Go to 3 minute on this one. Something to do with. What did I say? 21st. This day. This was the FOMC announcement of something. I think they were raising interest rates by 0.75, I think. Okay, so that day, initially today, I was noticing there was some similarity, or not just today, but I'm going to change this to like a 15-minute because I was seeing some similarities. No, it's not quite 15-minute. But here's the idea I had. It works better in SPY than SPX, but here's the idea, is that we just had a lot of consolidation this day just because we knew that this announcement was coming in. Then we broke down, S-curved up, and then broke down lower. So I'm just comparing it. We had consolidation in here, broke down, recovered higher, and then we're still in this kind of a zone here. We've got that breaking down. What's going to happen? I think this is happening next. I think this. So waiting for numbers, waiting for whatever that announcement is. That was this event. That was right here in yellow. Actually, here, I put it in red because it just made everything just go crazy. So waiting for this, we had consolidation to the left. And then once that announcement happened, once, FOMC announced on that day, and once CPI numbers came out this day, then it just put the market into this kind of torrent of dropping and going and what's going to happen. And obviously we got some more chop through here than we got today. We didn't have a bigger rally. That was the only thing I was saying, okay, that's not exactly, we didn't have a bigger rally back up and then crush back down. But I mean, what if we get something like that? What if we do that on Monday and then continue down lower? Then it will really look like what we did on this day. So go back and look at these in terms of fractals and what can happen on different time frames. And I can put both of these on a 3-minute chart. I can put both on a 3-minute, and then you can just squint. But that's the idea. It's like, okay, we had all this consolidation through here. All this chop right here looks really similar to all this chop here, and then move down, move back up, and then roll back down. I think, can I go to, should I do the SP? Can I go to SP? Okay, well, it does have them linked. Yeah, if it was still linked. What day was that again? 21st. What days? Here we go. Okay, so we're on a 3-minute on the left. And there we go, like that. And then here we are. I'm going to turn on extended hours. That's what I was looking at. Settings. And then again, you got to squint because it doesn't quite do it justice. And then 15-minute. That's what I was doing earlier. Okay. And then I was trying to scrunch it down like this. This is what I was doing earlier, just trying to make sense of this. Okay. So on because SPY you have after hours. And so it shows up a little better, giving this, I just changed colors again, sorry. There we go. All right. So all this consolidation to the left, and then we have an announcement. Some information comes out, announcement, some information comes out. I'm going to make that. I'm just going to point to it like that. Okay. Announcement time, announcement time. Okay. And then we start the waves and we move down quite a bit, recover higher, and go lower ultimately. Go lower, trace up, higher, and I think right now we're in this area. I think that's where we're at. I think this is coming. So I think Monday might have something like that. Or if we're going to have a bounce like this and then lower, then Monday will do something like that. I'm not trying to make it steeper. I think Monday could be like that. Monday could either be just straight off sell or some kind of retracement and then sell. It just depends on where we actually got to today with this. So take this for what it's worth with either SPY or SPX. But this is kind of the comparisons that I was seeing that we could do. And to me, it's fractal. It's just comparing things on different time frames, what could happen, looking back to left to see what kind of, where have we seen this happen? And it's like, oh, we sold off, we got higher, we sold off again. Yeah, like it's at least that, right? So anyway, now I'm gonna go reset on my chart. All right, it's not that hard to do, but I will not need to record that to do that for myself. So I'll do that later. But spend some time looking at this and make sense of what's going on. And if it's not making sense, message me. I'll point you to the resources, the people that I learned from, and it's a link in the description. So that way we can all learn, we can all get better at this, and hope this helps. This is Justin. Thanks.